Financial Argument. Follow us on YouTube.
Greetings and thank you for joining us at FutureMoneyTrends.com. I have probably the most important guest that we could talk to right now as silver absolutely begins to break out. Gold has already made its 52-week highs. The mining shares are on an absolute terror. We are coming out of the worst bear market in decades, and as my good friend David Morgan told me a few years ago, Dan, remember this. As bad as it is, it can be just as good the other way, and that's where I feel like we're going. I have our guest today as David Morgan of the Morgan Report. If you guys want to maximize your profits, in my opinion, you have to go with the mining shares, and who better to follow than David Morgan? He's got the inside on all these deals, what's going on behind the scenes, who are the shareholders, because sometimes the shareholders can be just as important as who's running the companies. David knows. He's talking to these guys. He's traveling all over the world. He's visiting sites. This is the guy. If you want the high-quality stocks, I know a lot of people feel like they missed the boat because these things have doubled and tripled, but we're just scratching the surface. And you want to go to themorganreport.com, subscribe. There's a free side, and then there's the paid side. Please get the paid side. Get these mining shares because they're going to change your life, in my opinion. Silver's up 20-30%. The silver stocks are up 200% and 300%. You want to own these mining shares, but you got to be very specific. This is a brutal market. There's tons of scammers in there. Let David guide you through and get the right picks. David Morgan, thank you so much for joining us today.
Well, Daniel, thanks for having me, and thanks for the big hard sell. Jeez. But, yeah, we do a lot of effort. And on that vein, I'll just tell you that David Smith and I, David does a lot of the trips. I don't do them all anymore, but I do, I do several. And so we went over to the Silver Valley, and we looked at two, I'll call them projects, and they were interesting, and I'll probably do a brief mention of them both in the next issue of the Morgan Report, but neither one of them really caught my attention as far as, something to get into now. They might be something that will be worthwhile, some point in the future, but, that's kind of what we do. There's a lot of stuff that we don't, necessarily, write about or whatever, because we try to sift through on the top tier, mid tier, and speculative categories. And, since we started, I started so young in investing and, got so, let's say, enthralled with the honest money movement and, why the system is where it is, at least from the monetary side. And there's so many things that have happened since I was, in my early 20s till now. But regardless, being really biased toward real money and mining shares, I just did so poorly in the shares. I did early on I did so poorly in shares because I was just shooting for the fence. I was doing all this kind of go big or go home and betting a lot of money on these really teeny companies, and when they peaked they came down there, and all the markets go down faster than they go up. So anyway, I don't belabor it too much, but what it taught me was that you have to balance your portfolio, especially in something that's got one of the highest beta ratings of all, and that's the gold and silver stocks. So because of that, when I started the Morgan Report, I did that. I balanced it, and that's why I'm still here and some are gone, because a lot of people that haven't subscribed to newsletters, or some that have, look at it as kind of tout sheets for small companies. And we certainly look at them, but the amount we look at versus the amount we write is probably like 10-1. And that's not where we focus most of our money, but it's probably where we focus most of our energy, because you have to look these things over really hard, up to down. And, like you said at the beginning, sometimes you'll have an uncommitted management, right? You've got management that may be okay or undeterminable would be a better word. You can't really determine good, bad, or indifferent. But if they don't have a dog in the fight, if they haven't bought their own stock, they don't have a pretty healthy percentage of the company, that's a sign. But then there's the other side of that same coin, which is they own like all the stock and they're just feeding it out into the public. So really, it's not easy. It's fun. I love it, but look, big money goes into big companies. Middle-sized money goes into middle companies, and speculations are just that. I'm not a believer in, go big or go home. Yeah, there's that 1 out of 1,000 or 1 out of 10,000 that does it and, has bragging rights at the bar and all that, and they've gotten, they took 10,000 $100,000 and became, worth 2.7 million or whatever, and that's great, and I'm happy for him. But that's not the way to do these markets and really come out strongly. And my hardest feat, as I've said before, Daniel, will be, telling people it's time to sell. And my plan right now, and due to change, this is why you subscribe to someone like me, is that, things change and you got to be in real time. Oh, David, 2 years ago you said this. Well, that's what I said 2 years ago, but guess what happened in that 2-year interim? This is what happened, and therefore I did this. But regardless, getting out, it's going to be tough to sell the paper. But paper's paper, stocks are stocks. They're not the real thing. So my plan right now is to, unload the mining shares into strength when everybody's screaming to buy them, and then taking those proceeds and do with as you decide. In other words, pay off debt, more metal, whatever. So anyway, I don't want to belabor it. I've talked way too much on, the Morgan report, but I'll tell you, I'm still passionate about it, Daniel, after all these years. And I really, truly do want to help people. I think that's, one of the keys. And yeah, David, you say that, but yeah, I hope you can feel it, because it is true. Been there, done that. Anyone, and, obviously, you've seen my work for years. Do we get it right every time? No, we don't. But we did outline the model strongly enough that even all our top tiers were above water except for one or two the whole time during this 5-year bear market. Not too many in the industry can say that.
No, not too many can. I mean, and that's the thing. There was a lot of companies that just went away. It's not as if, you look at a Morgan report portfolio, and now, of course, not only did they stick around, but now they're the biggest benefactors of this turnaround. So let's start at the mining shares first, since we've been talking about them a little bit. The mining shares, they've been on a big run here. A lot of people, I know the institutions are fairly upset that they've missed it. A lot of the smaller retail investors feel like they just they missed the boat. But we just came out of the worst bear market in a long time. What are your thoughts on this? Are we just is this the first inning? Are we still the national anthem for this bull market?
Well, let me take the long-term view. There's very few times in recorded history where, at some point there's a big move into precious metals, and that only happens based on trust. When the trust breaks down or confidence breaks down in the monetary system at large, and it's across the board, meaning like in a given currency, or in the case that we're facing, basically the global currency was the US dollar, then this ability to see metals go into what's called a super bull market takes place. And that's what we're facing. So there are certain points in history that are very rare where confidence breaks down at such a monumental level that the trust factor is something that comes to the fore of the people's consciousness. And this doesn't mean 100% of the people. It means a bigger percentage than are already in the metals for whatever reason. But the main reason is fear, unfortunately, and it's fear that that dollar that you have, that Aussie dollar, Canadian dollar, or the euro, or whatever you're holding, isn't going to be worth something, or it's going to be worth a lot less tomorrow than it is today. And once that is a psychological event, it isn't necessarily a monetary event. It's the precursor is all that's been going on since the crisis of 2008. Nothing's really done. So it's a process. The idea I'm trying to give is that the process has been unfolding as it does these last several years, from 2008 to 2016. But there usually is an acceleration point where that 100th monkey kind of effect takes place, and all of a sudden you have a lot of people that are rushing into the metals. So because of that, and I believe we have that leg ahead of us, if you go back to 2000, you see an up leg. Silver went from like the 4 or 5 level all the way up to about 780, came back down, made a nice run up to 21. I remember one of the best newsletter types on the internet saying this is absolutely it, the top. I called the $21 top. But that wasn't the top. And then we came down from there down into like the 9 range during the 2008 crisis, and then gold and silver the first to turn around, a V bottom, and we went all the way up to 48, 49 last day of April 2011, and then we've been in this bear market until recently. And I thought that my last call at the bottom, and I missed it a couple times, I admit it, was November of 2015. That looks like that's it. Looks like the bottom is in, and we're up. The point I'm trying to make is the third leg, the leg that we are just now beginning. So, yeah, we just finished the national anthem, using your metaphor. We've got a very long ways to go. And if you look at the HUI as a proxy for the mining shares, I mean, if you go, it hit 100 basically early 2016, and we're over 200 right now. And that's an index. I mean, that doesn't show, some of these shares, as you said, are up, very, very significantly already. But the shares are one acting to confirm it's a bull market, which means that instead of going up 1 for 1, they're going up 2 to 1 or 3 to 1. So if gold's up 30%, the shares are up 90%. Or if silver's up 22%, the shares are up 400 or 500%. Not all of them, but many of them. And so that's confirmation. You want to see that. You also want to see good volume, which we're seeing. And you also want to see the first leg within a leg, so to speak, be rather stealthy. And it is. I mean, most people, unless they're true, permabulls, really aren't even here yet. And they're not going to be here, Daniel, in my view. And this is, with 4 decades. God, it's hard to say that. 4 years of looking at this. But we had a lot of congestion between the 200 and, say, 250, 260 level, maybe, 200 to 260 level. And by the way, let me just put a plug in for technical analysis. I mean, I spent a lot of my life learning it and acquiring the ability to use it effectively. And it's just a tool. But people say, well, you cannot use technical analysis in a manipulated market. I've got news for you. The manipulations show up on the chart very loudly and very clearly. And in fact, if I was ever called as an expert witness to verify manipulation in the market, the first thing I would do is bring a series of charts into the courtroom and explain to the jury what exactly it would show on the chart. So everything is in the chart. Now, I'm not a pure technician. There's people that say I don't care anything about the fundamentals. The chart tells me everything. I don't believe that. I believe they tell you what's going on, real time, or what's going on the last week, or what the, levels are that you have to break through, or where support is, and that type of thing. I still believe that. I think they're a tool and they're effective to some degree. But I also think the fundamentals are important. But I think if you combine them both, which is what I've done for years, I think you have a better idea of, who, what, when, where, and why the market's going to do what it's going to do. And by the way, I'm like a Richard Russell, and I certainly can't step into that man's shoes. God bless him. But I try, which means that I let the market tell me. If the market has got to show me a certain level of this or that, this is what I explained to the Morgan Report premium members when I make a trade. If the market does this, then I. And then if the market does this, then I. And if the market does this and the volume is this and it stays there for 3 days, then I, which is what I did with your cousin Kenneth. I said, look, I think we're going to finally see silver catch up to gold and confirm the bull market, which is what I was waiting for. And on his show, it's something that I had just given to the Morgan Report subscribers. And I said, look, once we stay above 16 for 3 days in a row, it's time to jump on board. And it was perfect. And does it always go perfectly? No, it doesn't. But in that particular case, it did exactly what I had forecast it would do. And I think it impressed him because he came right back and said, my goodness, it did exactly what you said. We've got to get you back on. So anyway, excuse the ego. Believe me, it's in check. The market has humbled me many times, and I remain humbled by the market to this day. I've certainly made more money than I've lost, but any investor worth their salt has certainly taken their losses as well as their gains. And the idea, of course, is to run it like a business and, make more, cut your losses and let your profits run. So back to you.
David, do you think that the gold and silver sector itself will actually pull out the whole resource sector? Because I know there's, when you look at like copper, for example, you've got some deflationary forces, you've got slowing demand from China. Maybe it's the real demand showing up. But gold and silver, they're separated from this entire market. But my question to you is, will the gold and silver bull market that has essentially been birthed at this point, will it lead the whole sector out, or will resource stocks in general and commodities still be sluggish with gold and silver rallying big?
I think it's the latter. I really do. Again, I'll go back to the idea that let the market tell me. There is a newsletter writer that I respect a great deal. He has an engineering background like myself, and he was talking about the base, the commodities market in general, and was basically stating the opposite of what I'm stating. He was saying that, this is the beginning of the super cycle in the commodities market. I don't believe that. Show me, don't tell me. I would have to see, massive build outs that we've already witnessed, and we've basically in an overbuilt situation vis-a-vis China and everything else. And this is normal. I mean, this is even Austrian school economics. You go through a business cycle, but I don't see it. I see it as the money metals only. And if I'm wrong, the market will tell me and it will adjust accordingly. But right now, no, I think it's a phenomena that's for the monetary problems we have on a global basis, and we haven't built a base strong enough or worked off the malinvestment for long enough for us to really see the commodities boom. I want to make a caveat, though. I am very high on the ags, on the foodstuffs going forward, probably a year or two out. One thing I'll have to admit about me is I'm usually a little early. I usually get it right, but I'm a little early. But that's, which means you have to have patience, something that I'm still learning, I suppose. But regardless, that's where I stand. I see this as a monetary phenomenon at this point, and I do not see it as an overall healthier economy on a global basis.
Yeah, it's very interesting because, many people are buying the resource stocks in general because of what's happening with gold and silver. In a normal bull market, let's say silver could make new highs go over 50, gold make new highs go over 2,000. But as you know, this is not going to probably be a normal bull market because of the underlying fundamentals in both supply and demand and the monetary aspect of the situation that the world is in with negative interest rates. Do you think that a bull market in gold and silver could actually be the trigger point that kind of undoes the whole thing where there's a suppression on the precious metals, there's manipulation, because it is a small market? Could silver going to 30 and 40 break this whole thing open like a piñata, where all of a sudden you see triple digit silver overnight?
Well, I don't know about overnight. Certainly one, my age and what I've seen in silver can surprise even me. I wouldn't rule it out. And, to be very exact, I mean, when I get the Skinny on silver investing, I said in that book, I thought we'd see $100 silver in US dollar terms. And I still believe that. But overnight, no, I think we'll see an acceleration. We always do. I mean, that's what you're going to see. And that's going to be like, the technology sector when everyone was looking at tech stocks and everyone was rushing into tech stocks, and the tech wreck happened at the top, but Intel was going up every day. And I remember some of the financial commentators saying, I can't believe it, Intel's up again. And that's what you're going to hear in the metals. I can't believe it, gold's up for the 13th day in a row, and it just set a daily record. It was up $52 and things like that. So certainly the jumps will be larger on a percentage basis, maybe not as large. In other words, 3% of a million is a lot bigger number than 3% of 1,000. So, let's get that idea. But regardless, we're going to see a move, in my view, that's going in the financial record books, because all fiat currencies have always failed. So if there's anything you can guarantee, it's that this one will. Does that mean it goes to absolute zero? No. Does that mean it ceases to be used? No. What it does mean is that there's a reset. And how that looks, no one knows for sure. I mean, you've got Jim Rickards saying you're going to go to the SDR. Maybe. I wouldn't rule it out. It's another fiat system based on a paper promise. Is the world going to accept that, or is it going to be shoved down their throats? I don't know. What I do know is that there's enough money sloshing around, that just a very small percentage that moves into the metals for safety and the capital appreciation, preservation, and trust to gain confidence in something that's never failed for 5,000 years. When that takes place, this is going to go in the record books because it's a global phenomena. And people will buy shares over the metal for a couple of reasons. One is the metal may become very difficult to get, at least in size. Secondly, it's a lot easier to sit at your account with your Scottrade, E-Trade, Ameritrade. I don't leave anybody out because they're not paid by any of these people. But the idea being is you can click a mouse. And people love cheap stocks. So what's going to happen is that when this move really gets underway, today, and we're into like the last third of it where it's going up as I just described, and the financial channels even have to admit, my, look at the gold price, my, look at the silver price. Then these late to the party people are going to be clicking their mouses like crazy buying cheap stocks. And this is something you really have to be careful of, because this is where I kind of got burned my first time through in my youth, where there's a lot of stories that sound really good, and really all it is a big promotion. And so people say, oh, I could buy one share for $35 of this really good company that's going to continue to the top of the market, or I can get a zillion shares of this 3.5 cent stock. Oh, I'm going to buy some, man, have so many shares, and that's what happens.
And they do it in the Mickey Mouse voice.
They do it in the Mickey Mouse voice.
Okay.
Absolutely. So, thanks. Well, I do have a sense of humor. It's a rather bizarre one, but I do have one. So that's what I think will take place again. People say, oh, David, it's not going to happen. People can research on the internet, and they can do this on the internet, and they can, find out all the stuff. And you know what? Psychology of the human species doesn't change that much. When they're caught up in the moment, they're not going to. I mean, a lot of them will. I mean, you probably have a better chance this time of, making your own decisions or whatever. In fact, I told you, the interview we did face-to-face in San Francisco, that I own the domain silverspeculator.com, and, it's been rolling around in my head for a long time, how could I utilize that to the maximum benefit of others? And I was thinking like, well, I could put up, like every stock that's under $1 that has silver or gold in its name and give them a, cautionary statement. But then, you're dealing with these guys that are very, aggressive in nature, and they just probably love to get me for slander or something, so that wouldn't be too smart on my part. Anyway, I don't want to belabor the point other than be careful at the top. It's hard to sell in the strength, which I'm pretty good at because I've learned the hard way so many times, and I've cut every top on the way up, and boy, I really hope I get close on this next one. But the idea to get the tippy top is an amateur's game. You want to sell in the strength. We sold the silver market at the 48 something level, and I've still got accolades coming from people. In fact, there's a couple on the internet, and I won't name them. We'll keep their anonymity, but they basically retired on that move. And I'm not stressing people to trade commodities. I'm actually saying most people should not ever get close to that market. But I will also say, on the other hand, that one good commodities trade can make up for a lot of stupid moves that you've made in the past. And this individual was able to call it quits like 5 years early and sent me a personal thank you. So those kind of things do keep you going. Because I've certainly gotten enough hits on, let's say, the negative side of the equation. Well, I'll talk about the dollar for a minute.
Sure, I do, and we'll close it out with the dollar. But I do want to say real quick something you had mentioned about just the scammers, especially towards the end. The scammers, I mean, I'm sure you're seeing them too. I've seen some very shady companies that are named copper something, zinc something, one of them uranium something. And in the last 45, 60 days here, I've seen them, put their notice of name changes. Gold this, silver this, American gold and silver. So, yeah, the scammers are definitely onto this already. They're already teeing it up for people. Okay, the U.S. dollar, David. Let's close out with what's going on with the currency, because we do have the dollar's done well for years now, but gold has been making all-time highs in many other currencies, and now gold is even rallying against the U.S. dollar.
Exactly. Well, briefly looking at a long-term chart. In fact, if I go way back, and I'm not, just for talking purposes, I mean, when I started getting some, exposure on the internet radios, was with Financial Sense News Hour with Jim Poplava, and at that time, the dollar index, the dollar was at 120, and I basically said it has absolutely no business, being at that level, and it didn't stay there long. It came down, obviously. Anyway, more near term, I mean, you look at the dollar index is about 79 in the middle of 2014, and we rallied all the way up to 100 and tested that 2 or 3 times, depending on how you look at the chart, and now we're down at 94. And I'm making the point that 94 is a really good support level. It's sort of like the $26 level in the silver markets for so many times, and once we break down to the 94 level, it's pretty much a free fall for the dollar. And I think that is going to happen, and I think that is going to happen sooner than later, which means that you're going to see the anti-dollar gold go up. Now, there's people, and I'm most respectful. I mean, I look at a lot of people's work. I don't look too much at the technical stuff because I do my own. I don't want to be too influenced by others. But Ian McAvity, I call him a friend. He's a very bright guy. In fact, he was, 10 years my senior or something. But, I've had dinner with him several times, and just a great man to get to know. But on the technical side, he would throw up a chart of gold, and then he'd throw up a chart of the dollar, and he'd do these on vellums, if you even know what those are, Daniel, on these overhead projectors. And then he'd flip one upside down, and basically they lined up, and he said, look, the dollar moves opposite gold. Well, you can make that argument, but there's a lot more to it than that. And I'm not slighting his analysis. He knew more than that. But for the simple, I won't say simple-minded, but for a quick overview, that's a good way to look at it. But there's much more. It's much more complicated than that. Regardless, the point I want to make and stress at the end of the show is that watch that level for the dollar. That's actually more important than what's going on in gold itself, in a way, because it goes back to what we started the show with, which is the most important thing you can think about, and that's what is money. Is it a paper promise? Is it a digit on a computer? Or is it something of value? Well, all monetary systems that have based themselves on something that wasn't of value, of something that was merely an edict at law that says at the point of a gun, either literally or metaphorically, that you have to accept this, and it had no value. Then, of course, Gresham's law takes over, and there was a breakdown, not only a breakdown in the monetary system, but usually a breakdown in society. They usually go hand in hand. So that's something that is not said lightly. I just picked up a few things on my Google Plus account about, pretty negative toward me. And that's okay. I've been in the 1%, and I don't mean the 1% elite, the 1% that has been looking at, the fact that the Federal Reserve is a private corporation. I mean, when I said that in my 20s, people threw tomatoes at me. It was just, are you nuts? And of course, I was absolutely correct, but people weren't ready for it then. So I've trudged this road alone at times, where no one was with me, and I've trudged it with many were behind me or with me or ahead of me. But I've trudged this road, and it's been my life's purpose as far as I'm concerned. So back to the point. Sorry, I got on a philosophical bent. I'll come back. Watch that $94 level on the dollar index and watch it very carefully.
We'll be watching that, David, and really thank you so much. I think this is the perfect time for people to really start looking at this stuff very seriously, because I think not only for protection, but I think there are some net worth, game-changing, life-changing opportunities in front of us. Again, everybody, please, please, please go to themorganreport.com. Subscribe. I don't receive any compensation. This is an unbiased endorsement. I just believe with my whole heart that if you partner with the right people, if you buy the right companies, and this bull market explodes to the upside like I think it's going to happen and like I see it unfolding, I think people's lives are going to be changed at the perfect time, because we're also entering into a structural long-term depression, in my opinion, and a major change in the U.S. and the middle class. So at the very, very perfect time, you have a chance to get really rich, just to put it that way. So David Morgan of The Morgan Report, thank you so much for your time. Look forward to having you back on the show soon.
Daniel, thank you for the opportunity.